Welcome back, folks. In this video, I want to address a question that I'm often asked, which is how do I sustain my lifestyle? One of them is through ETFs. I'm going to break down the ETFs that I hold and two more that I'm going to add positions to. And the reason why I choose ETFs is because I'm not waiting for the stock market to go up in order for me to get paid at the end of the month. Some of these ETFs pay weekly, the other ones pay monthly. And this applies to anybody. If I would have known this when I was 30 years old, I would have put aside at least $5 a day. By this time, I would be a millionaire, guaranteed. I went through a lot of ETFs, and these are my favorite. Hopefully, you'll think the same. There's this wonderful tool, or should I say website, called ETFRC, meaning ETF Research Center. You can get the free account. That's the one I use. That's more than enough information for me. So let's look at this. Currently, out of the 8, I hold 6 positions. Most of them are JEPI and JEPQ. And the reason is because these ETFs are managed by the largest bank in terms of assets in the world. So JP Morgan is the largest bank. If there's a financial crisis or whatever it may be, the chances are very slim, close to none, that there's going to be a liquidity where you won't be able to withdraw the money. So these are the main 2 that I invest in. Now, with that said, let's look at JEPI. I'm not a financial advisor. I do have a lot of degrees, if that makes any difference. The closest thing that would make me somewhat suitable to give anybody advice would be my MBA with a concentration in finance. But other than that, and a minor in finance as well. Other than that, my background is chemical engineering and education, teaching chemistry and mathematics. So I'm big on mathematics, I'm big on statistics, and I'm big on keeping my money. So that's why I prefer ETFs, because I could see the inflow of cash every month, if not every week, as I'm going to show you some of these ETFs. So the first one I want to go through is JEPI. As I told you, it's one thing I like about this is that it tracks the S&P 500 index. Now, with that said, when the S&P 500 goes up, it doesn't go up as much. And when it goes down, it doesn't go down as much. So I like that. I don't need to grow exponentially when the market is up. I don't need it. And I definitely don't need it to go down. But it provides steady flow of income every month at around 8%. If you were to allocate, let's say, $10,000 to a money market account, you would never get the same returns as any of these ETFs. Furthermore, some of these other ETFs that I'm going to show you have higher returns on dividends than these 2. These are probably the lowest 2, but let's see. So one thing I look at is a little bit of diversification, just a little bit. They say diversify. I don't agree with it, but a little bit is good. So with this website, you could actually compare any ETFs. In this case, my 2 largest holdings, JEPI and JEPQ. You can compare the 2, and then it'll show you the overlap. So 24% overlap by weight, and 36% overlapping holdings. So meaning 36% of the companies from JEPQ and JEPI, they're the same. But in terms of actual money allocated, 24% is the same. In JEPI's case, Amazon is 1.7, Broadcom, Nvidia, Apple, Microsoft. JEPQ more leaning towards tech, so they have a stronger weight like Amazon. Now this is one of the 2 that I still have not invested in, but I'm going to start investing on it heavily. This one and the one on gold. So the other ETFs, they're all on the market. They're all based off the market. So at this point, I want to branch out and invest a little bit on commodities, gold and oil. The 2 most important commodities, bar none. USOY is based on oil. Over the past year, it gave 53% annual return, meaning that over the last 2 years, the stock paid for itself, or the ETF. So meaning if you had bought this 2 years ago, USOY, 2 years ago, by today, you would have had everything paid for, meaning after 2 years, it's basically free money. You already paid it off. And the other one is JLDI. JLDI is the one that is based off gold. and that one I like a lot. This one in particular is over 20%, and as you could tell, it has also gone up in price. So not only are you making money from the dividends, which no money market account, no savings account could even come close, but you're also gaining on capital gains. So what does this mean? This is the way I do things. This is how I make my extra cash. And I would highly suggest, if you could put away even only $200 a month, do it. This doesn't only apply for expats, but anybody. If you happen to be watching this video, you're lucky, because I think this video is a gem, because since my content is not based on finance, YouTube is not going to push this video. So kindly leave a comment and give it a like. So I already know I'm doing this out of kindness of my heart. I'm not doing it for views or for clicks, because I already know, since my YouTube channel is not based on financial stuff, the YouTube algorithm is obviously not going to push my video at all. Going back to diversification is not really a good thing. When you diversify, the problem being with diversification is that it's hard for you to have 40 different stocks and say, oh, I have 40 solid, financially solid companies. Barely in history do you find 40 financially stable companies that are going to give you a dividend and they're going to outperform the rest of the market. It just doesn't happen. Diversification is protection against ignorance. It makes sense if you know what you're doing. And I couldn't agree more. SPYI, I couldn't stress enough how much. Listen, all of these, they're great. Let's look at the performance. It started in 2023, I believe, around February or March, and it's gone from $100, and it's now valued at over $155. So not only did it 55% on your initial investment, you've been collecting, I believe this one is around 10%, 4.1, 14.3, 13.5, 13.2. You would have accumulated quite a bit of money. You would have gained 55% in capital gains plus all the dividend payouts. Got all of these. Maybe you want to take a screenshot and do a little research yourself. The beauty of these two right here, XDTE and XDTE, is that they pay weekly. If you initially put in $100, by now you would have made almost 25% in capital gains. But this one pays weekly, and it's really good. So I hope you found this interesting. I hope it was informative. Most importantly, I hope you start making some money, and I hope you start looking at some of these ETFs. If you have any better ones, let me know. Me personally, return yield is most important for me, and stability. So give it a like, leave a comment below, let me know what you think. By the way, check me out on TikTok. I'm much bigger there than over here. And if I'm missing anything else out, I don't know. Anyway, until next time, love you guys.
Cause I don't give a fuck what you say. Yeah, I'ma do shit my way. So you can go kick rocks, I'ma stack bricks up, build what I want to make. Yo, I got a lot of shit to say, so I'ma do this every day. I'll be writing things until I'm fucking buried in my grave. 6 feet